Welcome to Leaders in Lending. I'm your host, Jeff Keltner. This week's episode features my conversation with Jacob Bouer, the Director of Sales and Strategic Partnerships at Array. I really wanted to bring Jacob on to talk about Array because they're really providing technologies to help credit unions and banks embed things like credit monitoring, advice offering based on credit data, identity monitoring tools into their banking applications. I think it's a really interesting space as banks look at how to provide those kinds of services and also the kinds of advice that can be built on top of those experiences. Jacob and I dived into a lot of that, specifically what they're doing, what's working with their partners, how they're training staff, the kinds of services that are being built on top, the ability to bring in third-party offers into that experience, as well as offers from the institution and some of the non-banking institutions that are leveraging these services, and maybe what that tells us about the future. I thought it was a really interesting conversation. It's a category of innovation that I think a lot of lenders and just consumer banking executives ought to be thinking about. And hopefully this conversation provides some perspective on what others are doing and how you can enable these kinds of experiences for your consumers. So with that, please enjoy this conversation with Jacob Bouer. Jacob, welcome to the podcast. Thanks for making the time and joining us today.
Thank you, Jeff. Glad to be here.
Yeah, I've been looking forward to this conversation, but having more fintech conversations, and I enjoy them a lot. I think they're very interesting. So, given that you're not a bank or credit union, can you give us, for the audience, just like the 60-second version of you and Array and what you guys do, so we have some context for the rest of the conversation?
Sure. So my name is Jacob Bauer, and I am the Director of Partnerships and Sales at Array. At Array, I focus mostly on partnerships that have to do with banks and credit unions. So don't count me out too far away from that group of folks. But really, those partnerships that I'm working on are with core providers and digital banking providers that serve those kind of customers, those banks and credit unions. So out here for Array, really helping us embed our technology into the solutions that they're already buying, right? Their mobile
Mm.
apps, their online banking, their websites. How can Array's embedded credit and identity tools be embedded inside of those experiences where users and consumers are already interacting today, and then enhance that by adding credit and identity tools?
So, when you say credit identity tools, can you give me a quick rundown of what those are?
Yeah, sure. So we integrate with bureau data. And so basically, what we're doing is we're working to provide users with a better experience revolving around their credit score, getting access to things like the full credit report,
Hmm.
understanding why their score may be the way that it is, ways that they can actually improve that score. And then from there, that same data set that's being used to offer the consumers this insightful information can be used by the institution to also better understand their customers and what products might be most relevant for them. On the identity side, the use cases are a little bit different, but really, everybody needs to have their identity protected, and so these are another group of modules essentially that allow the bank to provide identity protection, identity monitoring, restoration services, insurance products. And the way that we sort of narrow down, like, since we have all these different cool tools and modules, is we get down to, like, what is your business? Like, who are the clients that you're serving? Are they small businesses? Are they retail customers? Are you selling mortgages? And then there's different modules that make sense for different customer bases. So that custom approach is, I think, why we've done really well in the market.
I'd love to understand how you see consumers engaging with this. I think many banks have um, some envies, maybe the wrong word, where they see businesses like Credit Karma that have really gotten a high degree of user engagement around things like credit monitoring, and they feel
Yep.
like, hey, that's a level of engagement I'd like to see. I'm curious with your partners, with the FIs, where are they seeing the most engagement with users in terms of the kinds of services or data that people are really kind of coming to and using on a recurring basis?
So I think it starts with getting somebody to actually opt in for the service on the front end. Like, you have to basically, create this marketing material to explain why should you check your
Hmm.
credit score in the first place. Why is that important? And there's education around that, and
Yeah,
there's
yeah.
a whole marketing plan that we work with our lenders to 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 go out to market with. It's emails, it's in branch signage, it's educating your bankers, it's really all of these things. And by
Interesting.
the time people opt in because they know the value that they're getting from that, now it's a matter of how can we use the information that we have to keep people coming back.
Mm.
And so there's all these different types of alerts or reasons why somebody should check their credit or their identity. That could be your score's gone up a certain number of points. There's been a hard inquiry. There's been an address change. So these are all
Mhm.
things that
Mhm.
we are then now giving these institutions a way to reach out to their customers again and say, hey, something's changed. We've deemed that this is worth you taking a look at this. And when they go and take a look at that, there's other sort of paths that that user can go down to either give the institution a better understanding of the intent of that
Mhm.
user because maybe they ran a simulation around, well, wait a sec, what might happen if I refinance my home?
Mhm.
Well, now that simulation is really helpful for the consumer because they now know what might happen to their credit score if they refinance their home. But what the institution now knows is that Jacob's interested in refinancing his home. And so that's sort of how it works is you have to provide value on the front end. It needs to be something that the consumer wants to do and engage with. But by providing something like that, you learn more about them so that you can offer them the right product at the right time.
So, two questions come to mind. Let me tackle the
Yeah.
first one first. You talk about two things that are fascinating to me for a fintech company with a digital experience, which is branch employee training and in branch signage,
Yep.
which are fascinating elements of driving users to adopting these tools. And you can think of it as arrays tools, but really, in the mind of the consumer, they're the bank's tools that are being provided to the consumer, right? So, I'm just thinking as an FI, have you learned any lessons about what drives adoption? I mean, is it the branch employees? Is it signage? Is there digital marketing? What's been most effective in your experience as your partners look to actually get their consumers engaging? And I think in many ways with I think many times our interactions with the bank are either transactional in nature or they're human mediated in nature. And to come to a service like this that I might have thought of as I go to freecreditscore.com or I go to Credit Karma or I go to whatever service, I'm now doing it in my bank. And that's a different thing than I've done with my institution. What have you
Yep.
learned about the ways that are most effective in getting consumers to actually adopt that behavior and come to that banking app to do this kind of credit monitoring or simulation kind of activity, which is quite different than I think what they've traditionally done in a mobile app?
So with our best partnerships, those digital banking providers allow us to have amazing real estate inside of their mobile apps and online banking experiences. So that design aspect of being sort of right next to account balances is a really great place to be to drive engagement right off the bat. And so that's like first and foremost, when you log into online banking, you want to see, hey, you can now check your credit score and we can add specific language of like why somebody might want to check their score. On top of that, we are, the way that we work here is we're on the same side as our institutions to promote engagement because that's how our commercial models are set up with them. You pay for what's sort of used, or when we pull credit, that's where we pay the bureau. And so that's why we're sort of partnered with these institutions and growing these accounts. And so you get assigned a growth manager here who is looking to understand how does your branch network work? How can you train up employees so that they can have these conversations so that they can better understand their credit at scale? That doesn't mean that every branch employee needs to teach them how to improve their credit. That's a model that we're moving away from because of this type of technology in the first place. But leveraging those people in the branch to know that it exists, why it exists, how to turn it on, that's a really important piece of the launch. And I learned this back in my first job at Bank of America in the branch. That was where I worked at college. I used to go up to the line of people waiting for the teller and say, "Did you know that you could do this on the app?" And they're like, "No, I didn't." So no matter how many emails you're going to send and how scalable that is and getting sort of this communication out, it doesn't matter. You're still going to have conversations in person in the branch and let people know that the things that you're investing time and money and resources on exist. And I think a lot of banks have problems like spending all this time and effort on fintech and then nobody actually using it. And so the launch is just as important as the actual build out. So that's how we feel about it, and we're growing a really great team around that. We didn't start there, but when we realized that this is what we needed to do to grow accounts, then it was something that we invested in.
And how do your part? I mean, you talk about an interesting concept. It's like great real estate, right, in that mobile app. And
Yeah.
I mean, I, one of the things that was always fascinating to me at tech companies, not fintech, just in general, was like the value of the real estate was high, and so you had to justify, why does my thing belong here versus something else? And there was usually some kind of ROI calculation or value calculation that went into that. So I'm curious, when you're talking to partners, like, what are the ways they're measuring the value created by placing these kinds of services in front of the consumers? What are they looking as the outcomes or the outputs or the ways to calculate the value being created by those experiences?
So there's a lot of companies out there that are providing credit information direct to consumer that have paved the way for companies like Array, because I think it's a general understanding that providing a credit score is now table stakes in digital banking. And so Array doesn't necessarily have to spend all of its breath on explaining why showing somebody that their credit is important. Um, that's been done already. I think where the data really now needs to go into it is how often are they coming back, and when they're coming back, how is that being used to translate into a new product sold or a better relationship with that customer. And that's really where like our data and the time that we spend talking about is really sort of worth talking about.
Yeah, so let's talk about that kind of new product sold, because I think it's a really fascinating part of what you do, in a big kind of culture shift for, I think, most FIs that are used to the next product being sold. Being, I mean, we use the word sold because it's generally a manual, not manual, but a human led, banker led, hey, conversation. What have you seen for what's been effective at helping your partners both either adopt this technology effectively or drive that acceptance of a more, maybe I'll call it a marketing led as opposed to a sales led approach to bringing customers of one product into maybe thinking about other products?
So it starts with like, you have the word upsell and cross sell that are almost taboo now in banking because you've just seen a lot of bad actors really try to push product, and that's not always the right way to think about growth for an institution. So now with companies like Array, and there are many others that can provide context around the financial life of the user through data, you need to be able to leverage that data in a way that's compliant, but also relevant to the consumer. And so there's this balance between being overbearing, but also showing somebody that there's a way to actually improve their financial life or get a better rate or get that car or buy that house. These are all the things that people want. They don't want a loan; they want a house. And so um, the way that I think about that is, especially as it relates to a credit report, is that the credit report tells a story about a consumer's financial life. Now, it's not as granular of a story as maybe their transactions and spending might be, but what is happening is it's talking about how they've borrowed previously, and it's talking about what their debt looks like, and their score's gone up, and these things can now tell you what their borrowing might look like in the future. I mean, there's a reason that people use credit scores and credit reports as an underwriting model in the US. And so by being able to proactively understand that information before somebody actually applies for the product, this is all pre-decision, right? So now I'm better understanding how you think about borrowing. What is your score, and then what might be relevant. I'm not going to offer that same mortgage refinance to somebody who doesn't have a home. I'm not going to send a mailer for a personal loan for somebody who's never taken out a personal loan in their life, but maybe the credit card is a way that they like to sort of do their spending, right? So there's a lot of different things that you can uncover, and maybe they have too many credit cards, right? You can see those types of things, and it's not that you get all this granular information on a credit report. I want to be very clear. There's a rules engine that sits on top of this data that we're using to determine what is the next best action. We're not saying these are all the data points on Jeff Keltner. What we're saying is based on these data points and based on these ranges predetermined by the lender, they fit into this persona or this product that we want to be recommending at this time. And so that's all happening inside of our solution. There's a place for those banner ads to show up where people can click and see what offers might be most relevant to them. And when they apply, guess what? The lenders are pulling credit again from a decisioning standpoint to decide how they want to actually underwrite those loans. We're not in that business.
Yeah, that's fascinating. I think this idea of next best action. How far during the journey of becoming good at that do you think you are? I mean, I feel like there's many cases where people might say the human element is really critical for understanding that full life journey, and the data points are hard to parse and figure out the best answer. And like, I imagine that's something that you guys see as. I don't imagine you view where you're at today as the end state of that. Like, what inning are we in terms of getting to a good place at next product recommendation?
We're in the first inning, absolutely. Um,
It's a long
but
game.
I would say, well, yeah, it depends, right? And I would say there's sort of two ways that I think we can get better at this. The first way is just from a design standpoint, right? So how do you now position offers and products for financial products, which are, this is not like buy these pair of headphones on Instagram. This is a big life decision, especially when you're selling loans to people. So I think from a design perspective, we want to continue to get better at figuring out how to position these products while also giving these institutions the flexibility of how they want to position these products, and then just continue to iterate and iterate to get better at that, get more applications essentially and more products sold. The other side of it is how can we get better at using this data, or even think about adding additional data sources to get a better understanding about the customer so that we can make better recommendations for the lenders of what they should be offering.
Are you at all at this point integrating the transactional data along with the credit data you guys provide, the transactional data that the institution might have in a depository account? Because it feels like those are each important, but just parts of the story that are a much more complete picture when you put them together.
So I want to be careful here because we're not doing that today, but there are a ton of amazing companies that are doing that.
But I'm not crazy
That
to think that maybe it's something that we would think is valuable.
absolutely, I think it would be valuable. And so there are great companies out there that we could partner with to do so, or even, try to figure out a way to do it ourselves at this point. That's not in my hands at all.
Yeah. So let me ask you this. One of the things that I know I've seen in our business, as just an example, is that sometimes the product that a consumer needs is not one that the institution has chosen to offer right now. Many institutions, for instance, don't have credit cards. Some haven't traditionally offered a personal loan. They might not be in the auto loan space. So they may see a need for their customer. And much like I've used Credit Karma as an example a couple of times, but I think given the kind of credit checking, credit monitoring example, it's a pretty good
It's a
one.
marketplace.
I can imagine the financial institution going, I want to be there to provide that to my customer, even if it's not a product I have. Have you guys thought about how you bridge the gap between I'm now in the position to see a need for my consumer, but I don't have the product to offer them. What do I do in that scenario?
A great example of this is car insurance, because now you may be able to see that somebody's just either got an auto loan with you or another lender, that you then may be able to say, well, now we've seen this trade line, you've fallen into this persona based on this sort of rule set that we've created around finding somebody adding an auto loan to their credit report, to then say, well, there's an insurance provider that we've partnered with to provide this type of car insurance. It may not come from the institution themselves,
Mm.
but they may be able to collect a finder's fee, if you will, and create a revenue stream by connecting their customers with the right products at the right time that they may not even be providing. Um, and so the way that I think about that sort of ad widget is what we call it, could be products of the institution, probably more commonly in that sense, but could also be almost like a blank slate for products outside of the institution, as long as the institution is comfortable, with those products being positioned there.
Well, in your insurance example, interestingly, not even necessarily purely financial products. I mean, insurance is arguably a financial product, but usually a different kind of product. So I think that's a really interesting concept to take what the bank is seeing, and I think it's really important if you want to be that home base that people are touching into, that you can point them in directions that aren't just your products. And I think there's a lot of credibility that comes from doing that.
Yeah, I mean, if you think about like card benefits as an example, I can save a certain amount of money on flights. Like that's not something that the bank is providing, but they're using it as an added value of
Hmm.
joining their card, right? So So we can think about it like that. You don't want to go too far off, and you want to be included in sort of that buying process. But I think it's limitless, but we also want the direction that we're going in terms of what we're providing to come from the institutions that we're partnering with. It's not like we're just going to say, hey, we're going to come to you with this insurance marketplace. We're going to have them come to us and say, this is the products that we want to provide, because again, we're taking that custom approach around like, well, what is the institution actually focused on? Who are the people that you're serving? And then how can we partner them with the products that make the most sense?
Interesting. And now I want to ask you almost the reverse of this, which is I understand that you have some non-financial institutions that are getting into this game with you as well, that are not banks or credit unions, but are offering some of these kind of credit monitoring or ID monitoring services.
Totally.
And I think it's really interesting as part of this trend I see towards embedded finance, where I'm hearing more and more about kind of financial experiences being embedded by applications that aren't financially oriented in general, but they're kind of bringing some of that experience in. So talk to me a little bit about what kinds of, you don't have to give me specific customer examples if you don't want to, but what kinds of experiences are you seeing that built into, and why do you think we're seeing that kind of financial monitoring making its way into home places that are not financially oriented in nature?
So I want to start with someone who's financially oriented, but not a bank or a credit union, which is a fintech, obviously. And the fintechs, they sort of have a different way of thinking about it because they know this is obviously a very engaging tool. And so while they may not be lending or maybe not lending a bunch of different products, they still want to have the function of the credit tools or the identity tools for different reasons. One, they may want to actually charge the consumer, let's say a subscription fee monthly for a sort of fully enhanced three bureau credit monitoring, or an identity protection with all the bells and whistles. So that could be their sort of revenue opportunity by embedding Array in and bundling it with all the other products that they're creating. Another model could be, we just want to have an app that people are going to come back to regularly, and credit is a great wedge to actually do that. And so that's coming up a lot, where engagement is kind of the number one value prop when we work with these fintechs. But now there's this pressure for a lot of these fintechs to actually start lending, because that's a great way for them to create revenue and make their shareholders happy, of course. And so for them to understand what products they should be bringing to market, why not have a better understanding of the credit attributes of your users to know, hey, based on the sort of offers engine work that we've done with Array, we now know that a personal loan product makes more sense than a credit card product, so on and so forth. So that information can also be used for product roadmap purposes, um, to basically figure out, based on the persona creation that you're doing with Array, which groups of customers fit into which buckets where certain products might be relevant.
All right, now I want to ask this one. Well, is there anything you've seen as I mean, you're kind of, it's an interesting point of the deployment of this technology out in the real world. Is there anything you've seen over the last, period of time you work on this that surprised you? Like, what's the most surprising example, use case, consumer behavior, implementation, and experience that's surprised you the most?
Surprised me. Well,
Come on, I've had lots
you
of
know,
stuff surprise me. It just didn't go the way I thought.
Well, I think I was surprised by how eager digital banking providers out there, such as Jack Henry or Alchemy, wanted to kind of work with us and offer this to their clients. I think we've done a great job at finding the right partners that are willing to lean into these partnerships, do the right marketing, and get the word out to their clients. We're not that old of a company. We're just over 2 years old, and so working with banks and credit unions is part of the like maturing of a company, right? We started with working with fintechs, now we're working with banks and credit unions, and it was time for us to sort of grow up and figure out how to answer all these questions, all the while like answer the regulators' questions to make sure that we were doing everything above board. And so, I was happy to hear, but also surprised that like we were able to just find so much success and find such great partners so quickly.
Interesting. What's your advice for FIs that are looking at maybe not necessarily partnering with you, but getting into this space? Because you talk about getting into the regulatory and understanding this is kind of a new set of capabilities many partners are looking to expand into. What are the things they should be, the lessons you've learned along the way, things you'd say, hey, if you're getting into the space, here's either from a regulatory point of view or from a consumer behavior and adoption point of view, key lessons learned you'd share with the audience on like what it takes to make something like this successful and work for the institution?
So don't feel bad about throwing the vendor due diligence packet or asking a ton of questions or putting your lawyers on the fintechs and saying, I know it's annoying, but this is how, we need to handle our process to be able to work with you, and do it as early and as often as possible. Because at the end of the day, like we said, fintechs need to mature to work with banks and credit unions because it's a highly regulated industry. And so but we can't just sort of make our processes too simple because then they'll never learn. And so I think for any institution, don't be afraid to sort of sick your compliance and legal teams on these fintechs, because at some point they're going to have to learn. It's almost like a make or break situation. I, for one, am lucky to have a really great team to support me around this stuff. It gets to a point where the questions get over my head, and I need to bring in the experts to answer those questions. And I also think we're lucky because uh, we're highly regulated by the bureaus in what we do. Every use case needs to be approved by them as well. And so, we have to do everything above board anyway, whereas other fintechs, they don't necessarily have to be regulated until their clients are regulated, if that makes sense.
That does make sense. That's interesting. So you guys actually have, it's not exactly regulation because they're not government entities, but real requirements on
Contracts,
what you can do with the coming from the bureaus themselves.
that's right.
That's interesting. That's always fun. Uh, External
It,
demands.
it, it is fun when you can answer things correctly.
There you go. Any advice for you on for any fintechs who might be listening about that maturation process, things you wish you'd done earlier in terms of getting ready to deal with banks, credit unions, how you can kind of ease your way into that experience? It is definitely a learning curve in my experience.
So just like the banks shouldn't shy away from throwing the questions at the fintech should lean into getting those questions asked to them. It's like, hey, if you, as a part of your process, are going to throw a 10-page document or questionnaire at us, do it 2 weeks ago rather than right before we're about to sign the deal. I think people are, thinking that they might get away with not having to answer those hard questions. Well, guess what? You never will. And so getting a head start on it is actually better in any case, than thinking that you're going to get 6 months, 8 months down the road without having to do it, because you will.
Yeah, the other piece of advice I've always tried to give the fintechs I've talked to is kind of like, if you know it's coming, be ready for it. Like don't make this a
That's right.
one-off Q&A process. Like you're going to get asked these 20 questions. So like have your here's the 20 questions you're going to ask me and here's my answers document or policies or procedures ready to go, because it's I find we now have a diligence packet and we basically hand it to our partners, and it's never like here it is, leave us alone, and it answers all the questions. But like 95% of stuff people want to know is already prepared and ready. And then you look a lot more professional having that
That's
ready
right.
to go. And then there's always a 5% that's a unique question, a perspective, a historical thing that somebody wants to understand a little better. But I think it behooves you to not view that as like, hey, ask me whatever you need to know and I'll answer it for you. But go like, hey, I have a feeling these are the things you need. We've got it ready for you so you review it when you're ready, and get ahead of that process and control it a little bit, I think really helps a lot.
Absolutely. And there's solutions out there to help fintechs do that. I come across them all the time, and we sort of lean into using technology to help us in our own process as well.
That's the
And
salespeople
also
that sell the salespeople, right? Like they're always calling you trying to sell you something.
yeah, exactly.
All right, Jacob. Anything else you wanted to cover? You thought I didn't ask today? I've got my three closing questions, but I'll give you a chance to tell me I missed the topic that we should dive into before I get to them.
No, I don't think we miss anything. It's always
Bold
fun
statement.
talking to you, Jeff. Yeah, I could talk for hours. Anyone who knows me knows that I could literally just fill your ear for the next 3 hours if, and it could be about fintech or it could be about anything else. So, all these questions have been great. You've been great, Jeff.
Awesome. Well, then here's my three closing questions that I ask all my guests. I'm gonna throw them at you now, Jacob. Number one, what's the best piece of career advice you've ever gotten?
Best piece of career advice I've ever gotten. Um, hmm. The best career advice that I've ever gotten that I don't think I always actually follow is, before you react to something, take a second, breathe, think about whether or not it's actually that big of a deal, and then respond. Um, I think that's something that I've learned from many people, many great leaders that you know that keep their cool as a cucumber when bad things happen, and it always seems to work itself out in the end.
Interesting. That feels like the old "don't hit send until the morning" on your angry email kind of the real time. Feels like good life advice, Jacob. Not just good career advice, but good just general happiness in life and personal circumstances advice as well.
That's right.
So you came in like me, kind of through the fintech angle into the consumer banking space. But what's the best advice you've gotten about the consumer banking or consumer lending industry as a whole?
Well, I was lucky enough to work at the Venture Center before I worked at Array, and the Venture Center is a nonprofit that uh, runs these accelerator programs for FIS and the ICBA,
Mm,
connecting their community banks and FIS's credit union clients, respectively, to fintechs, relevant fintechs solving problems for these institutions. And so I was the middleman between the fintech and the institution,
mm,
teaching them how to speak the same language. And so that experience of hearing the questions coming from the institution, hearing the pitches coming from the fintechs, and trying to help them figure out a way to work together and connecting the dots taught me from an unbiased perspective how to be really, really valuable from a very biased perspective now that I'm obviously associated with Array. And so now you can sort of assume what questions are going to be asked. What do they really care about? Is it price that matters the most to this institution? Is it doing something out of the goodness of their heart from a financial wellness perspective? Is it so that they can sell more loans or open up more accounts or all these different types of scenarios? Every institution is different, and the way that I think about sales is almost like a spider web. If you hear something, then go down that path, and then it could open up into two different directions because so that's kind of how I go into my sales process and understanding an institution is just like figuring out their business and then sort of going the direction that that conversation leads me and tying it back to the value prop of our product, which I think is pretty dynamic.
interesting. And my last question: what's one bold prediction for the future? Can be related to this or totally not, up to you. But one something that can bring you back here and tell you were wrong or right. But
So I think the core banking world is going to change drastically, that it's almost being forced to become this open ecosystem where any bank can bring any tool or any fintech with them. I think there's already a lot of pressure for that to happen. However, a lot of these cores are in a place where they don't necessarily have to do that yet. I think they want to, and it's not easy. And so everybody's sort of eyeing the same vision, and I think we'll get there. You said 5 years, right? I think we could do it in 5 years.
that is a bold prediction. That seems to be a now the core providers are going to call me and complain, but a slow moving segment of the space in terms of that, and some incentives the other way. But I do think ultimately the open banking, the interconnectivity, the benefit to the consumer is so strong. The push is going to be there to make those things happen. And you see laws in Europe that are demanding open banking requirements on these some of these technologies and some of these institutions to allow portability and accessibility of data. I think that's it may be a bold prediction in 5 years, but I think the trend in history is clearly in that direction. It's an exciting future, I think, for consumers and for anybody trying to build interesting technologies on top of that data, because it makes for a lot of surface area for innovation. Exciting times.
Absolutely. Agreed, Jeff.
Well, Jacob, thanks so much for joining me today. This was a fun conversation, hopefully insightful for the audience, and I appreciate your taking the time for it.
Thank you, Jeff. It was fun. Hopefully, we can do this again.